Dear students, in my last video, you have learned as to the meaning of companies, types of companies, then computation of business income and also total income, and computation of taxes on the total income. Now, in this class, we'll take up some problems so that you understand how to compute the total income and also taxes thereon. We'll begin with the problem. I'm Dr. Pandurangan Nayak, Principal, this College, Mantwa. Well, here is a problem. Given below is the profit and loss account of Gaurav Company Limited for the year ending 31st March 2020. So this is the profit and loss account of Gaurav Company Limited as on 31st March 2020. Okay, net profit is 66,000. Followed by that, some additional information is given. Let me explain the additional information given first, and then I'll come to profit and loss account in the meantime. Legal expenses include 4,000 in connection with issue of second series of debentures. So just see here, legal expenses or legal charges, 10,000. These 10,000 include 4,000 rupees in connection with issue of second series of debentures. So these are allowed in the computation of business income. So this is related to business income, so that is allowed. No question of adding back, so it is allowed. Then come to the second one. Fire insurance premium includes rupees 2,000 insurance premium paid in respect of commercial complex. Look at the look at the item rent from commercial complex, 6,000. So this is relating to income from house property, and therefore the expense which you just now understood in the adjustment, that is relating to this item. It's not relating to business income. Therefore, that is to be added back while computing business income. Similarly, municipal tax on commercial complex. This is also not relating to business income because municipal tax are paid on commercial complex. Therefore, this item also has to be added back, and that is relating to income from house property, that is rent from commercial complex. So that should be taken separately. General expenses include rupees 10,000 paid to approved charitable institution as donation. Look at here, general expenses 90,000. These 90,000 includes donation to charitable institution. So this is not allowed while computing business income. So first it should be added back so that you will get business income. Then next a deduction is available under 80G. So you compute total income. Then there are general deductions starting from section 80C to 80U. So there are 80G you have. So under that this item has to be taken. Once you add back while computing business income, and take it while computing total income. I mean to say gross total income minus 80G. Interest includes 5,000 interest on loan borrowed to pay GST liability. So this is very much allowed. So here you have got an item interest paid. This includes interest paid on loan borrowed to pay GST liability. This is allowed. Supposing it is given interest on loan borrowed to pay income tax, then it is disallowed. Then depreciation allowable as per IT Act 48,000. But what is debited here? Okay, here you do not have depreciation as such here. Whereas here is an item provision for depreciation. Any provision for that matter, that's not allowed. Therefore, that should be added back. And the depreciation allowed as per section 32, that should be deducted while computing business income. So compute the total income and tax liability of the company for the assessment year 2021. Yes, now let us see the items of the left hand side. So while computing the business income, establishment charges are allowed, entertainment expense is allowed, municipal tax on commercial complex is not allowed because that is relating to income from house property. There are five heads of income. Income from salary is not applicable while computing income from, while computing the income of company, and therefore there are four other heads. So this is relating to income from house property. Fire insurance premium, if nothing is mentioned, it is allowed. It is considered to be business expense. If they mention that fire insurance premium is in respect of commercial complex, then it is relating to income from house property. Legal charges, already you came to know legal charges of that. See here, legal charges include 4,000 in connection with issue of debentures. That's very much allowed. Then general expenses 90,000, already you came across the adjustment. I explained that. Interest paid also includes interest on loan borrowed to pay GST. That's allowed. Provision for bad debts is not, any provision is not allowed. Bad debts, that is allowed. Then provision for depreciation is not allowed. Any provision is not allowed. Advertising is allowed. Loss of goods due to fire is allowed. Provision for tax, income tax, wealth tax, provision for taxation, these are not allowed. GST is allowed. Reserve fund is not allowed. Proposed dividends are not allowed. So these are all items to be added while computing business income. While computing the business income, you have to take net profit as the starting point. Then all inadmissible expenses are to be added back. And expenses admissible but not debited to profit and loss account, they are to be deducted. Similarly, incomes credited to profit and loss account but not relating to the head business income or relating to other heads of income, they are to be deducted. And then you have to compute the business income. So I have explained this. Look at the credit side. Gross profit is okay. Commission is also part of business income. Dividend from cooperative society, this is relating to income from other sources. So not relating to business income, this should be deducted. Profit on sale of investment, they have clearly mentioned short-term capital gain. So this is relating to capital gain head, not relating to business income, so deducted. Refund of customs duty is allowed. Refund of GST is also allowed, part of business income. Rent from commercial complex, this is relating to income from house property, that should be deducted. Okay, I have explained in the entire problem. Now look at the computation of business income here. Starting point is net profit as per profit and loss account. All inadmissible expenses are to be added back. These things you have studied last year only, how to compute business income. Now it is a recollection of what you have learned last year. And I have already explained with the help of the problem. So municipal tax paid on commercial complex, this is relating to income from house property, that's added back inadmissible. Fire insurance premium on commercial complex, this is also relating to income from house property. Donation, any donation is not allowed here. A donation to charitable institution, that's added back, but deduction is available separately under 80G. Provision for bad debts, provision for depreciation, provision for taxation, reserve fund, proposed dividend, all these are added back. Any reserves and any fund, so if debited to profit and loss account or transferred to these things, they have to be added back. So inadmissible expenses you are added to the net profit, so you get 3,14,000. Now look at the incomes credited. Dividend from cooperative society, this is relating to income from other sources credited to profit and loss account, so you add back. Profit on sale of investment, this is relating to capital gain, short-term capital gain, deduct it. Rent from commercial complex, so this is relating to income from house property, deduct it. Depreciation allowed, so what is debitable, which can be allowed, what is allowed under section 32, that is deducted, so 48,000. So 1,32,500 is the total. So from the previous total, deduct this total, you will get business income. So one stage we have completed, computation of business income. Now we'll go for total income. Total income means what? I told you salary and income is normally not applicable to the company assessment, and therefore remaining four heads: income from house property, business income I already studied calculated, then capital gains, then income from other sources. So let us go for computation of total income. Yes, see here, income from house property. So rent received is taken as gross annual value. You know how to compute the gross annual value. So these things you already studied: municipal value or fair rental value, whichever is high, debt value or standard rent, whichever is less. So you'll get expected rent, and then you're comparing that to the actual rent received, whichever is high, that is taken as gross annual value. So here no other information is available except rent received, that is taken as gross annual value 60,000. Then less municipal taxes paid, it's already given there, 9,000, then 51,000. Then repair charges you have learned. So yes, the fire insurance premium relating to yes, what is this? Commercial complex. So fire insurance premium here it is given, fire insurance 5,000. Of that, yes, 4,000 is 2,000 is relating to insurance premium, and therefore that is added back. But there is no deduction separately under computation of income from house property. For that you have got standard deduction that will take care of all the expenses relating to let out house property. Therefore gross annual, this is 51,000 is annual value. Of that 30% standard deduction under section 24, that comes to 15,300. So the income from house property is 35,700. These things also you have learned last year, how to compute income from let out house property. So gross annual value minus municipal tax paid, whether relating to current year or next year or previous year, irrespective of the fact that you have paid it, so it should be deducted. Then there are some deductions under section 24. One is standard deduction and the other one is interest on loan. So here interest on loan is not there, 35,700. Okay. Business income already we have computed in the previous stage, 1,81,500. Capital gains are 20,000, short-term capital gain. There are two types of capital gains, short-term capital gains and long-term capital gains. In this problem, you have got only short-term capital. And income from other sources, you already come to know, dividend from companies, cooperative society, that will be 4,500. Together, gross total income is 2,41,700. Now look at the deduction under 80G. Donation to approved charitable institution. The actual amount is 10,000. Here, this will come under, yes, this will come under with limit donations. In the case of with limit donations, first you have to calculate adjusted total income. Adjusted total income means gross total income minus short-term capital gain taxable at 15%, long-term capital gain, then all other deductions under section 80 except 80G. Here you have got short-term capital gain but not taxable at 15%. Therefore, this is not to be deducted. So there are no long-term capital gains. There are no other deductions under section 80. Therefore, 2,41,700 remains the ATI, adjusted total income. 10% of that is 24,170. That should be compared with actual with the limit donation of 10,000. So 10,000 or 24,170, whichever is less. So 10,000 is the qualified amount. Of that, 50% you have to calculate. And therefore, that comes to 5,000. 5,000 if you deduct Okay, what you get is 2,36,700. These things you have already studied in the previous chapter. I have just recollected what you have learned. There are two types of donations. One is no limit donations, other one is with limit donation. As far as no limit donations is concerned, there is absolutely no limit. As far as with limit donations are concerned, qualified amount is calculated by taking two things. One is 10% of ATI, adjusted total income. Other one is actual with limit donation. Of the two, whichever is less, that is qualified amount. Of that, 50% you have to calculate here. So that comes to 5,000. So total income is 2,36,700. Now come to the tax calculation. Tax on 2,36,700. So there is no long-term capital gain. There is no short-term capital gain taxable at 15%. Remember, there is short-term capital gain, no doubt, but that is not on securities and that is not taxable at 15%. Therefore, separately, you cannot calculate the taxes on short-term capital gain. That is part of the total income, 2,36,700. So, at the rate of 30%, you calculate, that comes to 71,010. Then, on that, you have to calculate surcharge if applicable. If the total income exceeds 1 crore, then the surcharge is say 7%. On the other hand, if it increases say 10 crore, then it is 12%. This is in the case of domestic companies. In the case of foreign companies, it is 2% if it crosses 1 crore, and it is 5% if it crosses 10 crores. Here, surcharge is not applicable, therefore I have written it, but there is no value against that. The total remains the same, 71,000. Tax plus surcharge, 71,000. On that, you have to calculate health and education cess. This is levied on almost all taxes. The intention is to collect the resources so as to give encouragement for health as well as education purpose. Whatever amount you get, that will be utilized for promoting health of the employees and also to encourage the people to take up education, because both the sectors are very, very important for the development of the economy. And if people take care of health, then the expenses on hospitalization and medication, all these things will be less, and in a way that will be helpful to the country, and people are healthy. That is the intention. So here on 71,000, total of tax as well as surcharge. On the total, you are calculating the cess 4%, that is 2,840. Thus, tax liability is 73,850. So on the total income, tax liability is 73,850. I have given some notes here. Just see, all provisions and reserves are disallowed. So while computing business income, all provisions and reserves are disallowed. All payments of GST is allowed. So payment of GST is allowed, but any reserve or provision of GST is disallowed. Any provisions and reserves are disallowed. Dividend from cooperative societies is taxable and they had income from other sources. Refund of customs duty and refund of GST are not to be deducted while computing business income because they are part of computation of business income. Expense of rupees 4,000 in connection with the second series of debentures is allowed as business expense. Therefore, not added back to net profit while computing business income. Donation to approved charitable institution as donation are disallowed while computing business income, but deduction under ATG is allowed from GTI, gross total income. Already I explained that. Then deduction under section 80G, donation to charitable, same thing, continuation. So this is to be added back while computing business income, but it is to be taken under 80G as a deduction from gross total income. Donation to charitable purpose falls under with limit donations with 50% deduction. The amount qualified for deduction is 10% of adjusted total income or actual with limit donation, whichever is less. In this case, it is 24,170 or it is 10,000. So 10,000 is the least one. Therefore, 10,000 is the qualified amount of deduction for ATG. Adjusted total income is 2,41,700. Okay, now that we have already learned, all these things you already learned. I explained this. So that's about the computation of gross total. I mean total income, first business income, then total income, and tax on total income. And also I have given certain notes. So thank you very much. In the next video, we'll take up one more problem.